Morning. It's an interesting day to look at market dynamics. With the Fed's relaxed stance on inflation risk, investors felt confident buying equities and selling bonds, so clear risk on session. The S&P and the Nasdaq edged higher, so they're currently at record levels. Yields remain at around 1.7% and the US dollar gained. Now on the losing side of that equation were small caps with the Russell 2000 retreating and gold. Crypto also suffered. So Bitcoin had an intraday low of about 4.2% and is currently closing the session still down 2.5%, so at around 56,500. Those are still great levels to be at, but as we were nearing all-time highs, I suspect a lot of the investors were worried about the sudden pullback. Now, even more pain was felt amongst alts holders, so the Bitcoin Dominance Index remains relatively low at 57, but is higher than it was the day before, suggesting that alts underperformed on the session. And indeed, Ethereum is down about 5%, even briefly fell below 2,000. Chainlink fell about 8%, Polkadot about 7%, Cardano 5%. You get the picture. Yesterday was a field of green, today is a sea of red. Now, away from pure price action and looking at longer term or maybe more fundamental data, it's fascinating to see that miners continue to hodl. This is of course very supportive. It shows a confidence in higher prices, but also means for us mere mortals, lessening pressures in markets. Yesterday, I also mentioned the kimchi premium getting to very high level, and it fell sharply on the session, and that might actually have been a trigger for the pullback. It went from 22% to just 11%, suggesting that traders there kind of cooled down their enthusiasm on the Bitcoin and Ethereum markets. Now, lastly, for Equos users, today is an important day. We will release an order book for Equo tokens, our own exchange coin. If you've been trading, you've been earning, and now you can actually buy and sell those. So for Equo holders, the benefits are lower fees. You can stake them to get more coins. You can also use them as collateral for derivatives trades, and you'll also be eligible for future airdrops and services. So it's going to be fascinating whether those users, the market, how they're going to price them, whether they will want to hold on to them, if the non-holders will want to buy them, with eagerness or not. It's going to be an interesting dynamic to look at. Stay tuned. That's it for me today. I wish you a great day and a great trading day. If you haven't done so yet, please subscribe. It helps with the visibility, but also means you'll be updated when new videos come out.